What's up, guys? Welcome back to DCA. So what we're going to do today is take a look at Bitcoin and how we value this asset. So we often talk about Bitcoin in terms of where its all-time high is. Today, I'm going to show you a different way of thinking about the value of this network and how that may be able to give us an idea of how far down the asset may go as we continue into this bear market. So we know that right now the crypto market is essentially beholden to whatever the Fed is doing, whatever the interest rate is, whatever effects that has on the liquidity environment. We know that, and we've been talking about that now since December. What we need to do then is think about how is it that we talk about the price of Bitcoin, where it's at, and what goes into that value. What makes the price of Bitcoin go up? We're going to talk about it and look at that metric in a different way. Because right now, the way that we often think about the price of Bitcoin is by doing this. We look at the all-time high. We say 1250 back here in 2013, 20K back here in 2017, and now we're talking about 69K here in November of 2021. And that's a fine way of looking at the market, and I think it's reasonable. But the problem with that is this. These prices, it's a price that occurs at an instantaneous point in time, and very few people are able to get out of the asset and actually exit the market at that price. So these are very volatile prices that occur because of an extreme number of retail investors who come in at the last second and they try to get in and get a piece of the pie as the price is running up to these extremely high levels. So today what we're going to do is take a look at this. So we have the price of Bitcoin yet again here in yellow. And above this, what we have, the number of active addresses in the Bitcoin network. Because when we think about the price of Bitcoin, the price is a function of numerous different things, but amongst those are the number of investors in the asset, things like the liquidity in the market. So the liquidity is determined by interest rates, inflation, what the Fed is doing, money supply. Are we in a quantitative tightening period or are we experiencing quantitative easing where borrowing is cheap? Lots of money is flowing into the markets. We're seeing tech stocks go up. And as a result, we're going to see other risk assets like Bitcoin go up significantly. One of the other factors that influences this market heavily is the number of investors. And that just makes sense conceptually. So if you have just a few investors in an asset, like when we were back in the early stages of Bitcoin, there's just less total money. So that is why this metric here, the active addresses, becomes so important because it's telling us how many users of the Bitcoin network are there. And ultimately, for this asset to be successful, it needs to continue to see new people coming into the market. And I'll show you here, you can see that the price of Bitcoin is directly correlated to the number of active addresses. Our peak prices for Bitcoin occur at these peaks in the number of active addresses. So like we saw here in 2017 and like we saw here in 2021. Now, interestingly, we did not see a corresponding peak here at 69K. So we did see, however, people that were already in the market who had made a lot of money on various altcoins back here at this stage in the market. They were still around. As the active addresses were rising, we started to reach this higher peak here, approaching 1 million active addresses. You saw the price of Bitcoin really go on a run. What we're going to do today is talk about how much is the value of Bitcoin per active address. So per person in this market, what is the value of Bitcoin? And I think that this will be very telling, and this may help us identify where the price may ultimately go to. Because like we said, there are many factors influencing the price. So the price is a function of all of these different factors. So what we see here is the price of any given Bitcoin per active address. So you can think about this in terms of how many people are there in the network and how much does each one of those people contribute to the value of Bitcoin. So for instance, at our peak in this cycle, we got up to around here. We got up to around 8 cents, meaning that each person participating in this network contributed about 8 cents per Bitcoin. And remember, we're talking on a time basis here. We're not talking about the total number of wallets or the total number of addresses. We're talking about active participants, each person transacting on the network. So we saw that at peak, this reached around 8 cents per active address. Now, if we go back to some of these prior cycles, we saw back here in 2018, right at the end of this cycle, we saw that this was around 2 cents per active address. Back here in January of 2014, we were at under a cent per active address. Okay. And then if you go all the way back here to 2011, each active address was at around 0.001 per active address, right? So a tenth of a cent. And what you can see is that this has been increasing as we went from cycle to cycle. So there's a 700% increase in the value contributed by a single active address. And then there was a 144% increase. And then into this cycle, it was a big jump again. We saw a 340% increase per active address. So we're seeing a continual increase in the value per individual added to the network. And that makes a lot of sense. If you've ever heard of Metcalfe's law, this is a theory which states that networks, social networks, for instance, telecom networks, social media networks, they become increasingly more valuable as you add each new individual onto the network. And the best way to think about this is if you have one person on a telephone network, that's not very valuable because you have no one to call. If you have two people, now it becomes really valuable. Now, if you add three people, well, now it's great because you don't have to talk to the same exact person every day. And when you add that fourth person, the number of different interactions between those people exponentially increases. And that just goes on and so forth as you add each new person. So the value of the network then is thought to exponentially increase with each new individual coming on to the network. And that's exactly what we've seen so far, that each time the number of active addresses increases, the network is becoming more and more valuable. But you'll notice that fluctuates during the course of a market cycle, because even at times where the number of active addresses are relatively stable, we still see a large variation in the value of the network. And that's best encapsulated by where we're at right now. So to show you what I mean by that, if we look at where our max number of active addresses occurred, it happened right here in April at around 1.3 million active addresses. Now notice at that point, we were right here. So the value that each one of those people was contributing to the network was around 5.7 cents. However, when we got over to here in October, the number of active addresses was at around 900K, but each one of those was worth around 8.3 cents. And so what that means is during the course of a market cycle, the fluctuations in this value are essentially demonstrating to you the fluctuations in speculation, in market speculation. So when the number of active addresses is lower, but you're seeing this much higher, that's indicating to you that there is much more speculation in the network at that point. And just to really illustrate that, when we were here in October, when we reached our peak at around 8.5 cents, we were right at around 850,000 active addresses. Now, if we look, we have been at that same level multiple times here in January, for instance. So we were right at that level in January in terms of active addresses. What was the value that each one of those individuals was contributing to the network? It had moved down to here. So in spite of having the same number of active addresses, the value that each one of these people was contributing to the network was about half. Okay. So it was about half of what it was back here in October. So this shows you the change in speculation in the network. And this is a measurement of speculation essentially. Okay. So this arrow is essentially showing us at this point and at this point, the number of active addresses were identical. However, the amount of value that each one of these people in the network that they were contributing to the network was half. So you had a massive speculative run, in other words, occur right at the end of 2021. So as we went from October into November, when we got above 60K, on rather low addresses compared to the first time we did it up here at 1.2 million active addresses. So we reached a speculative peak. What we can do then is let's look at prior cycles and see how those cycles progressed. Where in this prior cycle, where were we at? We were down around 70%. Okay. Now in the prior cycle, we were down a huge amount, however. We were down 91%. Okay. In fact, if you go to the first, this was that double peak cycle in 2013, we were down around 67% from there. Okay. But from that second peak that we made at the end of 2013, we came down 91%. And in the prior cycle to that, we were down around 85%. There has been variability in the amount of speculation in each one of these market cycles so far. Now, the thing I want to show you is this, and I think this is very interesting, and I think it's very likely to happen again and something that people should be watching for. We've seen that from peak speculation in one market cycle peak, so like in 2011, in 2013, in 2017, and then in 2021, we have seen one common thing occur every single cycle, and that is the peak speculation level. So, like in 2011, it was, remember, around 1/10 of a cent per active address was contributed to the price of Bitcoin. Notice that we got below that. We got just below that. And that kind of marked around where the market cycle bottom occurred. Okay. So right at that prior speculative peak, because we'll have a large correction, speculation dies out, but then the Bitcoin fervor picks back up and we go on a run, but then we need to come back and correct back to the prior peak. Then in this 2017, 2018 cycle, yet again, we saw that the price per active address needed to correct from up here at around 2 cents per active address all the way back down to just below this speculative peak from the prior cycle. So we went from 0.001 at its peak up to around 0.8 of a cent at its peak, up to this peak here at around 2 cents. And now let's see where we're at now. So if we just bring this over, remember, we need, according to what has happened in prior cycles, we would then need to get back to this prior speculative peak. Now, interestingly, we actually did hit that level in 2019, which potentially that may have been the actual start of a true market rally. However, we kind of got cut short potentially by the COVID event. We'll never know. So, that's neither here nor there. But we started to get back to this peak and then kind of needed to correct with COVID. And we've come all the way up now, in fact, going approximately about 337% above that prior all-time high, up here to around 8 cents. And now we've started our correction, just like we've seen every cycle. What we're saying is every single cycle, the value per active address has come back down and hit this prior all-time high, and in fact, even went just below it. So that brings up the question, how much more correction would that need to be in order to get there? And that's around a 20 to 25% correction just to get back to that level. And in fact, we've seen prior market cycles, it's gone a bit below. So that would be around 33% or so. You see each time the true bottom has had a spike below this level. So this is definitely going to be a value worth watching. And if I had to guess, I do think there's a high probability that we will come down, we will go below this prior speculative peak in terms of value per active address. And with that, we'll see the price continue to decline some. Now, remember, this doesn't have to be a one-to-one thing, because this is a measurement of speculation. It is not necessarily a measurement of strictly price. So when we say 33%, that we're not talking about price there. We're talking about the value contributed by a single active address. It's merely a measurement of speculation. So this is showing us how much value is being contributed to the asset essentially by speculation, right? And we showed that by looking at the October example versus the January example, where October, with 850,000 active addresses, these individuals were contributing 8 cents per single Bitcoin. Whereas In January, the 850,000 active addresses were only contributing around 4.5 cents per Bitcoin. So we will have to see if, in fact, we continue down, we come down, we reach this speculative peak that we were at back here at the beginning of 2018. And from there, I don't know exactly what's going to happen. The economic circumstances are certainly different than they've been before. And I can't tell you with certainty that that would be the bottom, but I do believe that we're probably going to need to see more price correction in order to kind of reset the market before we can start to head back up. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.